Hey there, Alexander Nikitin is here, and in today's video I will show you the power of psychology of trading and the impact it has on overall results. And to do that, I will demonstrate you the statements from my real-time trading account that I use for demonstration purposes, and you can see them here. If I place my cursor over there, you see the number 1973.99 Nikitin Alexander, and the second one is the same 1973.99 Nikitin Alexander. Okay, so how I am going to demonstrate you the power of psychology using those statements. Well, I am to explain what are those statements and what they mean. The first statement is 120 something trades. I've made that experiment, market research or test, whatever you call it, real-time trading test on my smaller account that I use for demonstrations. So what are the inputs of the experiment? First of all, 120 plus trades that I decided minimum trades should be done. I've been day trading since I don't know what time. Okay, it doesn't really matter. 120 trades. Second is the second input parameter in this experiment was I was using manual pattern search. What is manual pattern search? Let me quickly demonstrate that. It is the software that draws patterns automatically in your MetaTrader this way. You just click on some highs and lows and the pattern is drawn. Let me draw some other patterns. X to A to B, B to C, C to D. And as you can see, it draws the patterns on history and real-time trading. You can real-time trade with that, or you can do the back testing. And because the patterns are drawn very fast in a second, you can calculate the large performance, large statistical numbers. So that's it about manual pattern search. Let's go back to those to the topic of today's discussion, the psychology of trading. Okay, I was using manual pattern search for real-time trading to generate 120 trades. Okay, what is the next parameter? In first case, I was risking 6% per trade. Sounds insane, but well, for the purposes of demonstration the psychology, 6% per trade. Can you imagine that? 6% per trade. If you have 3 losses in a row, well, you have 18. Okay, the second experiment is the same, using absolutely the same input parameters. 120 plus trades, maybe 130. Don't know. Second parameter is using manual PS for identification, and the last one is using 3% per trade. This is a more comfortable way for many of you. For me, for sure, for me it is more comfortable. Okay, so and now the statement number 1 shows these parameters, 6% per trade, and the statement number 2 shows these parameters, 3% per trade. As I told you, 1473.99 Nikitin Alexander is the account I have in my MetaTrader, 1473.99. So just extracted that from there. MetaTrader 4 generates those account statements automatically, and it opens them in a browser, in your browser. Well, don't pay much attention to this balance. It is the current balance I have, not the balance I had in the period of this trading. That's why this y-axis, this is x-axis, the number of trades, and y-axis, the number of actually money, is a bit wrong. So here we should have, I'll explain you in a second, we should have in that ending period something like 430, and it should start somewhere from 280, something like this. The beginning was 280 and 430 was the end. So you can see those ups and downs, those very big dips here. The drawdown 20%, the trades 126, yes, total generated amount is 1126, and we had that losing 977. Okay, not the best trading on earth, not the best, but it is positive. It is generating some money. Well, pretty good. If the fact I like is that trend line here, that the largest drawdown doesn't come lower than this line. It bounces from that, so I suppose it would go further and further in this manner. Okay, so pretty reliable statistical number, 126. What is 126? If you trade 4 hour only on 10 pair portfolio, you will have that amount in about 6 months of trading, something like this. If you only trade 1 hour, you will have that in, I don't know, a month and a half. And if you trade day trading and you use, I don't know, 20 pairs portfolio, as I had in this experiment, well, you will generate that amount somewhere in a week. 5 minute, 15 minute, 20 pairs. Just imagine that. You have trading without non-stop. Okay, let's go to see some other statements. The largest drawdown, you just saw it. What is the accuracy? 52%, slightly above break even. And you see the equity curves pretty much sideways. Well, it is trading to the upside, but it is pretty much consolidating. 52%. What is the average profitable trade? Is 17, and the average loss trade is 16. If we do some simple mathematical calculations, 1707 divided 1630, this equals 1.04, so almost 1-to-1 risk to reward. What else is pretty remarkable about this statement? Short positions, well, I've been losing more than one in short positions, but in long positions I've been generating more than I lost. Okay, so I suppose I'd bet a long only. I'd have 57% accuracy. Okay, what is next? These are some minor statistical data. Okay, profit factor is the number, 1.15. This means how much my total gross profit outweighs the total loss. So if this is above 1, this means I am generating money. If this is less than 1, then this means I am losing money. Okay, so this is the statement. I remind you, risking 6%. So 120 plus trades using manual pattern search and risking 6%. And now let's switch to the second statement that has absolutely the same parameters, 120 trades using manual pattern search, but in this case risking 3%. And get ready, guys, this is a very radical improvement. Risking less, but because feeling relaxed, feeling comfortable, and feeling at ease with the trading risk, accepting that risk, it led to these results. Okay, so total generated 268, more than generated risking more. When been generated 6%, I have generated 148. When been generated 3%, I generated 268. This is pure psychology. In this case, I had lots of fear and emotions and what else? I don't know, greed, and that's why I've been kind of blind to see this opportunity, and I've been kind of hesitating to take the next opportunity, or I've been kind of in a hurry to take the second opportunity. That's why it was nervous. I've been nervous risking 6%, and the equity curves looks nervous. Yes, and when you are calm, when you are at ease, when you feel comfortable trading, then your equity curve looks greater, and you risk less. This is very important. You risk less. Okay, so what is the maximum drawdown? 3%. Can you believe that? 3% only. Hey, stop liking my ideas, mate. What is the accuracy? 74% of winning accuracy. What is long positions accuracy? I am like buy more than sell. Maybe subconsciously I like buying more. 80% accuracy. 8 trades out of 10 were winners. Can you imagine that? It is almost impossible. Absolutely the same software. The patterns were drawn automatically. I just have shown you that. Manual pattern search. Boom, 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 and the pattern is drawn. Something like this. Absolutely automatical. What? No need to change something. This statement looks impossible. Yes? You might think that maybe I have changed something in that statement. Well, I can export it in front of your eyes. Let me go to account history. Let me go double click that, save as detailed report, replace the existing one. Yes, because I already have that, without changing, without anything at all, changing nothing. Boom. Same. 3% maximum drawdown. 74 accuracy. Okay, you can say, oh, it is possible to have 74% accuracy if your take profit is 1 pip and your stop loss is 100 pip. In this case, you will have 99% accuracy, yes? But look at the average risk to reward. What was my average take profit? 381. And what was my average loss? 306. Let's do some quick calculations to calculate the average risk to reward. 381 divided 306. So it is 1.24. So my average take profit is 1.24 larger than my average stop loss. Average profit trade, average loss trade. I tell you guys, 130 trades. This is not accidental statistics. Well, maybe if you take 10 trades, the results can be accidental. If you take 20 trades, 30 trades, then maybe this could be accidental. But when you have 130, this statistical data is pretty much reliable. Well, and in this statement, it is the same, 126. So guys, think about it well. When you risk less, when you feel comfortable with the risk you take, when you feel at ease with trading, you generate more. But when you are in a hurry, when you are nervous, when you risk a lot, when you risk too much, you feel nervous, and your equity curve is nervous as well. And in both cases, this is very important. In both cases, this strategy is absolutely mechanical. What is it? Need to click that. And in both cases, the identification part is absolutely mechanical. It is objective. Let me show you that. Some trades, a bad pattern and an alternative bad pattern. The first bet pattern is a loser, it went to the upside, didn't reverse, and the second bet, that is green one, is a winner, hitting that 50%. Well, that's it. Okay, back to those statements. Once again, guys, it's all about psychology. Even using the same system, even using the mechanical tools for identifications, you can have that sideways moving equity curve, or you can have this rising equity curve as in the second case. So my experiment is over. I proved that with facts, that psychology has an extremely great impact on your trading, and mostly it is connecting with accepting the risk. If you accept the risk, if you feel comfortable, then you trade extremely well. And if you are not accepting the risk, you trade not that well. You feel it is I don't know, many of you couldn't trade it even this way. So think of it twice, 3 times, or even 4 times. Think of it and think of it once again. If you guys are interested in my software, well, you can find the link for that software in the description as well. And if you guys want to contact me, to talk to me, well, I will drop the links to my TradingView profile. Who the heck is that? Alexander Nikitin? TradingView profile, it looks this way. Alexander Nikitin is all-time tops, is the guy that enters top 10 world traders. 1, 2, 3, 4, 5, 6, 7, next to Akil Stokes, just next to that guy. Pretty good guy. Akil Stokes. Okay, the guy that enters top 10 traders according to TradingView rating. Okay, so you can PM me here, or you can go to my Facebook group, join my Facebook groups, the TGP Trading Group Program, and some go to my, I don't know where you can find that, contact me. Well, at least I will drop the profile link in description as well. So if you want to contact me, you will find links in description. So I suppose that was useful once again for you. When you feel nervous, your trading equity curve is nervous. When you feel relaxed, your trading equity curve is smooth. Well, hope you found that interesting. If so, subscribe to my next videos, click those likes, and I hope to see you in my next videos.